Hey everyone, this is Rob Roy, and welcome to the LA Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's get to a chart of the markets. Taking a look at the SPY. We are doing this on a rare Thursday night instead of Friday night due to travel conflicts tomorrow. So we do still have Friday to end the week, but looking at the day on Thursday, we opened to the upside, and then immediately the market was sold off. You can see this big move to the downside here. We tested the 50-day moving average yet again. If you've been watching the recordings, you know how often we've done that since October. But we were able to rally up, still finished down on the day, close the gap from yesterday's move where we did open higher. And finish right smack in the middle of the day. If I put the volume underlay on, interesting thing is yesterday on the gap up move, pretty low volume. And then today, little better volume on a down day. And if you looked at an intraday chart, most of the volume was on that immediate sell-off early in the day, the first hour. And then we kind of fought our way back throughout the rest of the day to close still down on the day, as I mentioned, but well off of the lows. So we're still in this area where 680 gets bought. It got bought again this week. So that's the line of the line in the sand, as they say, the important level of support. And if we ever break that and start to move to the downside with any follow through, as I've mentioned, 650 comes next. That's the next line right here where that wave 4 low was back in November. And if you look back at the move from that November low up to 680, you can see how vertical it was. That's why I keep talking about the importance of 680 if you're long the market. If we break below it with follow through, we'll see 650 rather quickly. But for now, every time it comes down to test that level of 680, the market gets bought. At some point in time, you would think that we're going to come up here and test this resistance line at 695 as we continue in this large ascending triangle that I've been talking about for seemingly ever, but for weeks for sure. One of these days, we're either going to break down out of this triangle or break up out of it. No way to know which way. But what you know is with a triangle, especially one of this size, the breakout will be pretty volatile. So we're either going to take off and run, or we're going to break down and have a significant move lower. I've been showing this chart recently, and I think it bears showing again today. On RSP, which is the equal weight ETF on the S&P. Look at the difference. We closed at a new high. We still have the intraday high where that wave 3 is labeled. We're still in an active wave 3 because the labeling is green. And by the way, if you haven't gotten a copy of the software yet, you're new watching this, a lot of times people ask me, what software are you using when you do this? It's from hub.com, HUBB.com. You can go there and get a free copy of the software. You get the LA Wave labeling for free, exactly as the algorithm was written by Ralph Nelson Elliott himself. And there is an opportunity to subscribe to the AI signals, but you don't have to do that if you just want the software. But back to the chart of RSP, again, a new closing high. We'll see if we can take out the intraday high. But notice how smooth the line is to the upside in a nice 45-degree angle. That's what you want on anything that you're long. You want to see it move in a 45-degree angle. And the reason is the corrective moves are less severe. Markets move in impulses and corrections. That's the crux of LA Wave. That's why it works so well. But when you have a 45-degree angle ascent, the corrective moves are less severe. So where the SPY is in that ascending triangle with a wave 5, we're still in an active wave 3 here. So the next step is to see if we can take this high out. So it shows you, again, the influence of those big tech stocks that most people feel are very overvalued now has on the SPY. Looking at the VIX, we did move back a little bit to the downside. As you've heard me say each and every week, I'm just not as much of a fan of the VIX anymore as an indicator of the market. Just it doesn't seem to work. It's definitely difficult to trade. I used to trade the OEX a lot. So back when it was on the S&P 100, the OEX, it was a great indicator, but not so much here on the SPX 500 stocks. So OEX, great. SPX, not so good, in my opinion. But one thing there is to note, look at this line. Again, a 45-degree angle ascent of the higher lows on the VIX. I think is something to keep in mind as we move forward on which way we're going to break out of that triangle on the SPY. If we take a look at the bond market, so let's go and look at TLT, and pretty interesting what's happening here. Here's the prices on the 20-year. Remember, TLT is prices. Prices and yields move inversely. You've heard me say that a million times by now. But we're holding in there. In fact, we ticked up today on the 20-year on TLT. So as prices move up, that means yields and rates are going down. Normally, that's good. Lower rates is normally healthy for the markets, the equity markets especially, but not when they pancake down, meaning that all across the yield curve from the lower end to the higher end, all rates are moving down, and the yield curve is getting pretty flat now. That's not healthy. A steeper yield curve tells you that you have a healthier economy. So that's what you want to see. It's also better for financial stocks. And I'm just going to deviate here real quick and show you a chart of the XLF because it gives you an idea of what happens when you have a flat yield curve. You can see this big move down in the financials. So normally we talk about how lower yields is good for the financials, but not when there's a flat yield curve, because financials make money on the spread. So they borrow money on the short end, lend money on the longer end. They make money on the spread. So when it's kind of flat, difficult for financials to make money. Had a nice little bounce over the past 2 days, but not that big a deal. So back to TLT, looking here, the wave 4 has moved up. So we've got past that 61.8% level. Maybe we're going to get to the point where we take out this wave 4 a little more, just enough to relabel the pattern from Elliott wave. But for now, we still have technically a 5-wave pattern to the downside. So it's possible that yields start to rise on the longer end of the curve. But if we disqualify this pattern and we're not seeing rates go up on the longer end, I think that could spell trouble ahead. So as I always talk about, it's healthy to have a good working knowledge of the bond market if you want to be an equities trader, derivatives, options, whatever. You don't have to be an expert in the bond market, but having a good working knowledge is helpful. Now let's take a look at the chart of the TNX, which is the 10-year, and this is actual rates on the 10-year, where TLT's prices on the 20-year, but you can see what I was talking about. Rates are down even on the 10-year. And again, that's not the quite short end of the curve, but it's shorter than the 20-year, gives an indication that the yield curve is fairly flat. And this 5-wave pattern has been disqualified, so there's no expectation of rates moving up on the 10-year. You just ignore the Elliott wave when you see that. And now let's go and take a look at the chart of the macros, the charts you guys like. Comment about this each and every week. So when we take a look at the macros, the legend's in the upper left-hand side. The upper graph is a blend of those 4 indicators. And what you want to look at is what the blend is. What color is it? It's been green, meaning that expansion has been in control. But at the very top there, you can see the very last part of that in the upper right-hand corner is red. And that's because when you go to the lower chart where it separates those lines out, you can see expansion has fallen off a cliff, basically, and contraction has moved up. Contraction is in the lead. So the market is, or the economy is contracting from a macro standpoint. Then when we take a look at the liquidity chart, which you guys really like, this is the one that bothers me the most. You can see this big separation from where the S&P has gone on where liquidity is. On the positive side, we did get a tick up in liquidity. What's been bothering me is the Fed told us they were going to shrink their balance sheet, i.e. withdraw liquidity through the end of November, and then they were going to re-inject liquidity, which they did for a bit, and then they pulled some back out, almost all of what they had injected. And now there's just this little bit of a tick up. What bothers me is the spacing between the two. It's like a rocket that goes up and runs out of fuel. Liquidity is the fuel for the economy and the markets. So if the rocket goes up and runs out of fuel, it rolls over and comes back down. That's what the markets are going to do if we don't get liquidity back in, if we don't get that fuel for the markets back into the system. So at least for this week, a little bit of an injection, but you can see the separation there and how far we have to go to at least be supportive. It doesn't have to go up and touch the black line, but it's got to get a bit higher than this to be supportive of the market breaking out of that 695 level and continuing higher. Then if we take a look at the next chart, this one is global financial conditions against the S&P, and that has ticked up. So For this week anyway, there's a little bit of positivity to look at as far as a potential for the market to break above 695, but I'm still leery until we see more liquidity coming in from the market. Anyway, watch last week's recording. You'll get my little soapbox on why I think that is. All right, now let's take a look at the dollar. The dollar is actually holding in there pretty well. No problems here. We still have a 5-wave pattern labeled, though, and the wave 4 is right at that 61.8% fib level, which means that wave 5 to the downside is still a possibility. And for now, again, all we can do is technicians is analyze the data that we have at any given point. And right now it's fine. But if it starts down and we break below that 96 level and head towards that wave 5 low, then I'll start to get concerned again. But for now, no harm, no foul. We're fine. Now let's go ahead and take a look at the DIA. So we'll look at the other markets, and the Dow, okay today, kind of finished flat, or the S&P finished a little bit down on the day. We got a ways to go to get back up to those wave 5 highs that happened earlier in February. And I'm concerned about this extension because we're right at the 161.8% extension. If we are able to run back up and test that again, does that relabel to a 3? Does it stay a 5? Because there's a limit to how far a wave 5 will extend. There's a possibility of a 261.8% extension, but it doesn't happen very often. Nothing is ever 100% or 0% in the world of trading, but going to a 261.8% level happens a very small percentage of the time. So we'll see what happens if we can get back up here. The most positive for the markets would be that 5 to relabel to a 3. It did break out of its ascending triangle, came back down, tested it, and that's where we are right now. Looking at the Qs, bit of an uglier chart there. You can see that we broke to the downside out of its own ascending triangle, but it's holding its own support level just above 600. So we're at 680 on the SPY. It's just above 600 on the Qs, but a little bit uglier day here. We did finish above the 10-period moving average, though. So again, something to hang your hat on if you're bullish or long the market, but still not exactly what you want to see, and a break below 600. And you figure out where the next level is. To me, it's 580. Comes fairly quickly if we can't hold that level just above 600. And that's also where we found support back in November on those lows. So I think that move would happen fairly quickly as well. But we got a lot of work to do on the Qs if we're going to try to get back up here and take out this resistance on this real nice double top just above 630. That's the key there. Now going to a little better picture is the IWM. You can see that we have this symmetrical triangle. What a great pattern. You have a perfect zigzag pattern. And I've talked about this a lot. If you're an Elliott fan and you're not trading zigzags, you're really missing out. Even Elliott talked about them. That's why I started focusing on them. So you have a 38.2% B wave correction, yields a 61.8% expectation. It's exactly where we went. And then we've been pegged there. And we've gone through consolidation in the form of a symmetrical triangle. This will break out. With any symmetrical triangle, any triangle really, ascending or descending as well, you have no idea which way you're going to break. Either of those triangles can break either direction. So we could break up, we could break down, but for now, a decent day. You can see we closed near the high of the day, unlike the other averages that we looked at on the IWM, which is interesting, isn't it? The small caps, where you think there's a little more risk involved, had a pretty good day. So now we go ahead and take a look at chart of energy. Natural gas, I've been talking about this. It had its heyday. We just had another winter storm. You saw all the videos up north. Didn't put a dent into UNG. We just seem to be destined to work our way back down to test that wave 5 low. We're nearing the end of winter. I don't know where the catalyst could be. Even some more rhetoric about the talks of a conflict with Iran wasn't enough to put a bid here. It did earlier in February, because of the concern about the shipping lanes. LNG moves through the same shipping lanes that oil does. But even that didn't put a bid in UNG. And again, I think we're probably headed back down towards 10. Then we look at oil. So we'll take a look at USO. And nice down day today on the open. And then we rallied throughout the day and closed well above the opening price. And we're in this area where this is where I think at any point in time, and this is a bit, I think, from the rhetoric on talks of potential military conflict with Iran, is keeping the bid in oil we're up in this area on both these two peaks. OPEC announced a production increase because they manage the supply demand curve very well. I say that every week. So they don't want to see oil up here. And it seems counterintuitive. Why wouldn't they want the price of oil higher? Because they know if they kill demand, if they send a whole bunch of people going to electric vehicles, then oil drops significantly. They want to hold it at an elevated price, but not too high, not too low, kind of Goldilocks, which is around 75, right where the 50-day moving average is. So we need to see oil come back down a little bit more. Now, if we move to the metals, looking at GLD, had that nice consolidation. Look at that bar on GLD today. I'll spread it out a little bit more so you can see the open and the close. So we opened right at flat, traded all the way down to the 50-day moving average on the low, and then closed above the open. So a nice move there in GLD, and we'll see if it can continue that. I like the start of this more 45-degree angle-ish look on GLD. I don't think metals are done for this year. I think that they move higher. We just don't want to see this vertical stuff. You know the rules. What goes vertically up oftentimes comes vertically back down. We show it all the time. And no security in any time frame gets too far from its 10-day moving average, at least not for long. So both of those were corrected. Now let's see if we can move in a more orderly fashion in a more 45-degree angle. Looking at SLV, so we take a look at silver and almost the identical chart. It's interesting how gold and silver are kind of moving in lockstep now. They don't always, but recently, as of recent, I should say, they have had the same vertical move up, same vertical move down, same separation from the 10-day moving average that got corrected, and then we consolidated, and we're moving up. And again, you can kind of see that more 45-degree angle, which I like, and you should like too if you're long the metals, because when you have that kind of move, you don't have quite the significant moves from a correction standpoint. Looking at the cryptos, little different world here. Yesterday looked a lot better. We had a little bit of a bounce attempt, but back down again we go. We are hugging the 10-period moving average. We are building a bit of a platform here. I call this the launch pad effect. When you kind of consolidate sideways, it at least gives the opportunity for a quote blast off move. I was born on the Space Coast and grew up there, so I use a lot of space analogies. But the separation from the 10 and the 50 period moving average also give an idea that maybe we could have at least a bit of a reflex bounce. I'm not calling for Bitcoin, at least as evidenced by the BITB, to take off and run, but we could bounce up here towards the 50 period moving average, or even all the way back up to 45, which acted as support back in November and for a little while here, not long, at the end of January. Ethereum's chart, kind of the same thing, going sideways here. Again, nice little move yesterday, but back down a bit today. But okay, still holding above the 10-period moving average, and that same kind of sideways. Looked like we were about to break down out of it, but got right back in this sideways consolidation. Again, the separation from the 10 and 50-period moving averages. Maybe we get some sort of a bounce in Ethereum as well. Same thing with Bitcoin. I'm not talking about a big takeoff and run, just a bit of an oversold bounce. Seems like it might be warranted there. All right, so taking a look at some stocks of interest, and look at IONQ. This one gets asked about a lot and has been asked about a lot on TradeFinder lately. And if you're not familiar with TradeFinder is something that we do every Tuesday at 1 p.m. Eastern Time. It's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A at the end. Great event. You can sign up for it with the link you see on your screen. It's free. Great community there. They interact with each other as well as with me. So we'd love to have you join. And the last couple of weeks, people have asked about IONQ, and boom, on its earnings today, big move to the upside here. Hate the fact that it gapped up like that, but still a nice move to the upside. We did bump our head on the 50-period moving average on the high, so maybe a little backing and filling is warranted here, but I thought I would update you on that because so many people have been asking about it, specifically during TradeFinder. All right, now if we move into other stocks of interest, and by the way, stay till the end of the stocks of interest for a special giveaway that I have this week for you. So a few more stocks to go through, and then you'll see what I'm talking about there. So just hang in there for a few minutes. So taking a look at Broadcom, AVGO. It's just NVIDIA, Broadcom struggling here. It seems like we're in an anti-AI type environment. now, and you can see this move to the downside um, below its 10-period moving average, and it looks like we are in danger of taking out that wave 4 low. Maybe not. There is a little bit of support here in this line that I've drawn, um, just about where we are at 320, but we give that up, which we almost did on the low today, and we're back down to 300. Maybe that's enough of a test and we can build and move from here, but Broadcom has some work to do. You got to give back above the 10-period moving average, and the 50-period moving average is so close. You need to clear both of those with follow-through. Then maybe we can start looking at 375. But for now, more in danger of taking out that wave 4 low than anything else. And so if we go look at NVIDIA, I just talked about the two of those. We take a look here, and you can see on the chart here of NVIDIA, we got up there, nice earnings report. Looked like we're going to break out of this channel that NVIDIA has been in forever, but nope, not so fast. Right back down we came, and now we're trading below the 50-period moving average on the low. You can't blame Jensen Huang. He's everywhere talking about their backlog, how much work that they have, how many orders they have, all this kind of stuff, and it's just people don't want to touch it. And this is exactly why I keep talking about the importance of a follow-through or confirmation day. Yesterday, it looked like, all right, we're breaking out of this long consolidation. We're getting ready to run here on NVIDIA. Not so fast. I don't really pay attention to this Elliott wave pattern too much. I like symmetry, whether it's in a 5-wave pattern or in a zigzag, triangles even. This is not a symmetrical 5-wave pattern, so I don't pay too much of that, pay too much attention to that. But you do see that a close even above that line yesterday meant nothing. It's a head fake. The market loves to give head fakes and fake out the retail traders. Right back down we go. You need to have a follow-through or confirmation day. That should be one of your core rules, I think. Going back to more stocks of interest, we take a look at EEM. You guys have asked about that. Emerging markets, and you can see that we had a nice zigzag pattern to the upside here. And now it looks like maybe we're going to go up to the extension on the C wave. Once again, a B wave at the 38.2% fib level, which yields that 61.8% extension expectation. So to be clear, the zigzag did what it's supposed to do. But when you're in a wave 3, oftentimes you'll get an extended C wave, which means it moves to the next fib extension. So that's the 100% level here, up just below 65. We did fill the gap from yesterday, so we stayed above the 10-period moving average on the low. Maybe we're set to move higher on EEM. While I'm talking about EEM, in Top Shot, for those of you that are familiar with Top Shot, we had a nice Top Shot trade here on TUR, Turkey, part of emerging markets. So you see the link on your screen if you want to go to sign up for Top Shot. I basically pick a trade each week from our 3 portfolios. So I cherry pick one, so you get one a week. Well, people have loved this. Good way to test the tires on what we do with AI here at ewotrader.com. So sign up for Top Shot. All right, so back looking at the chart of TUR, we had that nice alert on it on the way up. So I just thought I'd give you an example there. Back to more stocks of interest. We'll take a look at SanDisk. So SanDisk is sitting here. I've talked about this. I'm excited about this pattern. You could argue that maybe that upper trend line needs to be moved a little bit here because we still have that set of lower highs with the higher lows. But when you have a stock that runs up and then consolidates in a symmetrical triangle, that is my favorite of all triangle patterns. This is going to break out. SanDisk is going to move. I don't know if it's going to break to the upside or the downside. Nobody knows that, but it will break out. When I used to do live seminars, I'd show this pattern. I'd show one that broke hard to the upside and the exact same pattern that broke hard to the downside. There's no way to know other than the fact that SanDisk is going to make a move here in the not too distant future. That much we can say. I made my name in the world of options from a particular way of trading triangles using delta gamma acceleration in the options. But I can tell you that even with that triangle knowledge, you do not know which way it's going to break. Now we take a look at Palantir. Haven't looked at this one in a while. PLTR hovering down here, building some support at this wave 3 low. It's still green though, so it means that's still an active wave. The algorithm is not sure it's done, even though we were able to close above the 10-period moving average today. But just as I said before, today means nothing. we have to have a follow-through day. You can be encouraged by the separation between the 10 and 50 period moving averages that maybe we are due for a bounce in Palantir. It will bump its head likely around 150 if it can do that. But again, today doesn't mean anything, but we may have something going if we can get some follow-through tomorrow with a higher close. And just when I talk about follow-through or confirmation days, it counts as a follow-through day if you close higher than the previous day. But it's a stronger signal if you close above the high of the previous day. So just a little tidbit there. SMCI, you guys asked about this one as well. It's one that I've been watching. Man, after they had their accounting stuff and the stock split, it's just been sitting here going sideways for quite a while. At some point, maybe it'll want to bounce, but we still have an active wave 4 here, and it's only at 22%. Elliott liked the wave 4 to get to at least 30%. So maybe we can get a little bit of a sustained bounce here, get up towards this 40 level, which would act as resistance if we were able to get that high. But every time a bid tries to come into SMCI, it gets sold into. Not able to push it below 30. So if you're wanting to trade SMCI and look for maybe a bit of a bounce higher, your stop should be at 30. If it breaks below that, then we could be going a bit lower. So there's not a whole lot of risk versus reward if you wanted to make an aggressive move there. Then taking a look at Netflix, what have I been telling you? Nobody wants to touch Netflix until that deal is done. And now Netflix has said they're walking away from the deal with Warner Brothers. They're going to let Paramount have it. Now there's a lot of conspiracy theories that maybe Netflix never really wanted it. They just wanted to bid the price up so that they could saddle Paramount with a whole bunch of debt. Well, Paramount's going to have a whole bunch of debt if that deal goes through. And if you believe that Netflix really is done, then I think you could be seeing Netflix go a lot higher. Now, with these last 2 days, we are a little separated from the 10-period moving average. We bumped our head on the 50-period moving average on the high. But I think if you look down the road, intermediate term, so a little more of a horizon, there was the short-term bounce right there. Maybe we do some backing and filling, and then we could get a sustained move, maybe even disqualify this 5-wave pattern. But even in a LA wave 5-wave to the downside pattern, we would have more of a bounce. I just question if they really are done, if they really are backing away. I think you see a renewed move in Netflix, and I wouldn't be surprised to see that 5-wave to the downside pattern become disqualified. All right, as I told you a little while ago, if you stayed to the end, I had a special giveaway for you. Each and every month this year and the past couple of years, we've been doing a giveaway where we've been giving away one of our free level 3 subscriptions. Well, it's not free. We've been giving away for free. It's worth thousands of dollars. It has the time strategy, which is a sideways income-based strategy. It has triangles that look for breakouts and consolidations, and it has the AI-fueled impulse strategy, which is primarily based on those zigzags within the wave 3. So if you go to our website, you'll see the value. It's a lot, but we've been giving away one just for simply leaving a comment underneath this video. But this week, I'm going to do something special. If you can write in what you think my favorite Expendables movie was. You know, there's been a whole bunch of them. What, 4? If you can name which one you think is my favorite, so list which one you think it is. Everyone that gets it right is going to go into a special drawing this week. And we'll be giving one of those away for this week in addition to our normal monthly giveaway. So leave a comment. Make sure you're a subscriber, because you have to be a subscriber and leave a comment. You're in the drawing. And in the bonus special drawing, leave which you think is my favorite Expendables movie. And good luck to everybody. Thanks for your attention as always. Have a great weekend. Look forward to talking again soon. Take care, everybody.